Well, Rob, of course, we had the Dow Jones ending 1.4% weaker yesterday, and we seem to be playing catch-up today, so our market mired in the red this afternoon.
Yes, obviously we're following the US market. So the US market actually started to close below the 200-day moving average, which is quite a benchmark for the index. And after a week or two of good movements, we've now come below that 200-day moving average. So people are slightly worried, and it just shows you that people are worried about that American economy.
Of course, yesterday's data, existing home sales down 2.2%, and of course the market was looking for an improvement of about 5.5%, so quite a big swing. But of course we did have the end of that tax that was given to first-time home buyers.
Yes, obviously the tax for first-time home buyers is ending in June. We just have to make sure in the next numbers why there was such a decline. It looks like they're saying that a lot of it is because they just can't process so many documents, etc., in enough time for that June closing. So maybe we'll see improvements again next month. But if we don't, and that trend continues in home sales, that just shows you that the economy in the States is very fragile, and that the consumer is going to recover very slowly, and not that good recovery that we've been looking for.
And of course, we've had US President Barack Obama warning consistently across the world that stimulus shouldn't be withdrawn too quickly. And of course, this home buyers tax, which is now being withdrawn, could be coming a bit too soon, Rob.
Yes, they've already extended it once. It was going to end at the end of last year, and they've extended it an extra 6 months. And if it looks like that the home sales are going to weaken again, they might have to reinstate it. So we'll keep a close eye on those numbers. I think we'll see the Fed are meeting later this afternoon, and we'll get an outlook from what they feel the economy is looking like in the States.
And of course, it's really the policy statement that you're going to be focusing on, because it's a given really that interest rates will be kept where they are at the moment. What do you think the market would like to see the Fed saying?
Well, I think they obviously need those interest rates to be lower for a longer period of time. And maybe we'll see some improvement from the Fed saying that maybe by the end of the year, that's when the interest rates will start to move, indicating that they feel that the economy is recovering enough. So interest rates low for another 6 months, but maybe an indication that they feel that the economy is looking better by the end of the year. If they say that it's going to have to extend for another 6 months into the first half of next year, that will be quite negative.
Of course, yesterday we had the UK budget announced, lots of austerity measures announced with that budget, and really in line with what we're seeing across Europe. Rob, how's the market interpreted the budget yesterday?
Well, it's a bit of a double-edged sword there. I think the budget just showed that they're going to be cutting back on a lot of expenditure. I think it took a little bit of worry about sovereign debt issues out of the market, but at the same time it then brings worries about how much growth the UK is going to be able to bring into South Africa, bring themselves into the world economy. If they cannot get a strong GDP coming through with these austerity measures, it means trading partners like South Africa will be under pressure, and we'll need a much weaker rand for the European, for the UK businesses to import from South Africa. So at the moment, it's good for the sovereign debt markets, but not so good for the growth issues.
Well, we had some data here just a short while ago, consumer price index at 4.6% for May, so really slap on with expectations, and that was down from 4.8% in April. We were chatting yesterday, Rob, and of course we had those poor employment figures out yesterday, inflation today. Does this point, do you think, towards another interest rate cut this year?
It does allow the Reserve Bank to put an interest rate cut in. I think the employment numbers are very worrying. You see Pravin Gordhan coming in and say that it's a bit depressing to see that the employment numbers had weakened so much. And I think it does give them leeway with at 4.6% on CPI that we could have another cut this year. So it definitely does increase the probability slightly.
And of course that cut could also help to weaken the rand slightly, which would help our manufacturing sector at the same time.
Yes, in those employment numbers, manufacturing actually was one of the sectors that increased employment by 3,000 jobs. It's not a big number, but at least it is increasing, and it's a very big sector in the economy, and an interest rate cut would definitely help that manufacturing sector and hopefully weaken the rand slightly.
Of course, very few winners on the JSE today. We do have Naspers. It was up over 1% this morning. That was after opening weaker, but this is the share that shed 5.5% yesterday. Do you think yesterday's move was overdone, Rob?
Yes, it looks like it was overdone. It was responding to regulatory issues in China across virtual money in the internet world, which is 10 cents, which Naspers owns 35% of. But at a closer inspection from the analysts say that it won't affect 10 cents earnings dramatically, and not Naspers earnings either. I think people coming back into the market and picking up some of those Naspers at really good levels in the low 260s, I think it's a good level to pick up some Naspers.
Do you think Naspers, though, has too much riding on Tencent and the Chinese economy, or do you think this is a good entry point for investors wanting exposure to China?
I think a lot of people that do buy Naspers are looking for that massive kicker from China, and it's like an extra boost to the share price, and it does trade slightly above where it should be. But at the same time, China always surprises to the upside, and when the numbers come out from 10 cents, they always surprise on the upside, and people are being rewarded for that. I think people maybe got a little bit of a fright with the Chinese problems and the regulatory issues that were coming through. And I think maybe a little bit of risk came out of the Naspers share price. But for people that aren't in Naspers yet, I think it is a good entry point.
Rob, for our markets, do you think we're going to remain under pressure for the rest of the session until we have that FOMC statement tonight?
Yes, I think we will do. I think there's no real good news coming in before that that'll push our markets back to the upside. There are some support levels on some of the big on Anglos and Billiton that are holding today, but I don't think that we'll see any movements on the upside unless the S&P turns around dramatically later in the afternoon.